conversation forward. We've got Saurabh Mukherjee from Marcellus Investment Managers joining in on the show right now. Saurabh, hi, morning. The big GST reset. I guess when it comes to the consumption fillip that the economy needed, one couldn't have asked for more. But do you think that's going to translate into equity markets seeing that bump up as well?
I think the big thing to cheer here is, in a way, some consistent with the budget in February earlier this year, Aisha, the government is now turning towards consumption, right? I think in the February budget itself, the middle class tax cut was a step in the right direction. I think this is yet another big step in the right direction. This whole emphasis on government capex, I think, will gradually fade away. And the entire focus, the government's focus will be on reviving consumption, because that's 60% of GDP. So positive move. The two areas of caution I would flag is the downside effect, the detrimental effect of Trump's tariffs will only show up over the next 3-4 months. I was in the Tirupur-Coimbatore area yesterday, and people there are in a state of shock. The textile sector is in a state of shock. I think we will see major downside impacts there if the 50% tariffs continue. Similarly, in the gems and jewelry sector in cities like Surat, Agra, Lucknow, Ludhiana have big footwear export and sports goods export sectors. So just it's worth keeping in mind in this morning's euphoria that there'll be massive downside impacts on the economy. It's easy for us to say on TV that it's a 1% of GDP hit to the economy when Trump hammers us with 50% tariffs, but the pain will come in the coming quarters. And the second area of caution as we celebrate the GST cuts is the job creation picture. The white collar job creation picture remains grim. I think we're heading for savage job cuts in the IT services sector. That too will drag down consumption. So on the whole, boost from GDP, boost to a consumption of 1 lakh crores, I would say roughly from the GST cuts, but comfortably counteracted by Trump's tariff hit on India. And therefore, overall, I'm not so sure there's a big GDP growth boost, whilst the economy tilts away from government capex towards consumption. People like Marcellus, folks at Marcellus who invest in consumption stocks, we are happy about it. But overall, at the economy level, I think the good and the bad is counterbalancing each other.
So, Saurabh, are you saying that we're going to continue to see this range-bound market, which we have been for quite some time now?
So, good question. So, I've been discussing with my colleagues. Have we seen the bottom of the earnings degrowth cycle, right? So, earnings compression cycle. Over the last 6 quarters, every quarter earnings growth has been slower than the quarter before. Has that cycle bottomed out? I'm not so sure that cycle has bottomed out. I think the quarter to September also will be muted earnings growth. I'm optimistic. I'm hopeful that the quarter to December might be the first quarter after 8 quarters where earnings growth moves up rather than going down. So the quarter to September, I think, will still have somber earnings growth, but hopefully in the quarter to December, that cycle will reverse as these GST cuts trigger consumption. But let's not get too carried away because the Trump hit on India is meaningful, and the job situation on the white collar side remains pretty grim.
So, Saurabh, where is it that you see earnings pressure continue?
Right. So the first obvious area is obviously the export-oriented sectors, textiles, gems and jewelry, sports goods. Those are also sectors which employ a lot of people. I think Urjit Patel, the former RBI governor who's now gone off to the IMF, Urjit Patel has said that almost 1 in 2 jobs in India, 1 in 2 jobs could be impacted by Trump's tariffs, right? So that is a hit at a mass consumption level. Lots of jobs in the 2, 3, 4 lakh per annum segment that get impacted by the American president's actions. The second area is if white collar job creation stays muted, what we are seeing, and I think we'll see this in the NPAs, is in tech hubs like Bangalore, Hyderabad, we're seeing tech sector couples, husband, wife, both working in the tech sector. They're struggling with loan repayments, right? So we're seeing a rise in financial distress in a segment of the Indian economy which we thought was affluent. And that piece, I think, will show up in that piece. The tech sector distress will show up in bank and NBFC NPAs as we get into September quarter and December quarter results. So those are the two areas where where I think the consumption piece actually will be muted. The GST reforms are necessary because we need to counteract those. But I'm not yet opening the bottle of champagne saying we're off to the races courtesy this GST reform.
Okay. Will the champagne bottle be opened only once we have some resolution with Trump? You think that's the big
I think that's a good party. I think if between now and Diwali, India and America can reach a deal where even if we get 25% tariffs, I think 25% tariffs with these GST reforms, we will be off to the races. I think there will be a great way to celebrate Diwali with or without the champagne. And let's hope that pans out. Let's hope India and America can reach a deal, because what's happening at the moment is it's not just painful for the economy. I think if we can't resolve this tariff situation, there's many other downside impacts that will come through in due course. So let's hope between now and Diwali, America and India can reach a deal on tariffs and we go down from 50 to say 20. 20 would be fantastic. Even 25 we can deal with.
But, Saurabh, there are two ways of looking at it. What transpires with Trump, hopefully it's going to be a positive outcome. We don't know how long it's going to take. Either this way or that, something will come out at some point. But what we do know is what the government intent is, like you were earlier saying, this consumption fillip, FMCG, QSR, apparel, footwear. Now, I know most of these sectors don't have that large weightage on the index, but eventually it's all going to boil down to perhaps better saving and financialization. Is there a way to play this GST trade?
Yeah, so I think there are big sectors which are benefiting. So FMCG clearly benefits, but I think the biggest beneficiary is auto. The market, I think, has discounted that already. So smaller cars, two-wheelers, tractors, thankfully we've got exposure to much of that. And auto and FMCG, I think will have now a stellar 6 to 12 months. Remember, the finance minister's income tax cut also is kicking in, plus the GST reforms kick in. So the second half of the current fiscal, I think, will be a bumper 6-month period for both sectors. And I think the market will start tilting. Remember, I've said now for the last 2 years that where I'm most worried about India is small and mid cap. Where I'm least worried is large cap quality. So if you think about large cap quality as the FMCG stocks, auto stocks, the high quality lenders, I think large cap quality is a good place. Large cap quality investing is in a good place in India. Earnings growth will pick up further. As it is, earnings growth was actually reasonable for large cap quality. I think earnings growth picks up further. The small and mid cap piece, I think, remains vulnerable, partly because of valuations, partly because of export dependence, and partly because of the NPA pressures, the asset quality pressures, which I think will start bearing down upon the smaller lenders in the country.
Okay. So that's the take coming in. Saurabh, hi, morning. Snehi also joining in. Now, while we are talking about consumption and autos when it comes to the entire GST activity that we've seen, what about other sectors that have seen benefits, for example, hospitality, or you also have insurance? What about all of these sectors? Are they looking more attractive than they were before? Are you going to be assimilating them into your portfolio?
So we've been long-standing investors in general insurance. We think it's a well-placed sector. Thankfully, the country has good private sector general insurance. And much like in banking, where the PSU banks and are sliding away, barring SBI, I think most of the PSU banks continue their slide. Similarly, in insurance, the private sector, the general insurance market, the private sector continues to benefit from the lethargy of the public sector. The GST reform piece should, I think, benefit the medical insurance sector. And we've had long-standing investments in ICICI Lombard, where we're hoping to benefit somewhat. And we've also had investments in GoDigit, where too we think we can benefit somewhat. So there'll be marginal benefits there. On hotels and hospitality, I think the situation remains positive, partly because the supply side in hotels and hospitality is still fairly muted, especially the big city supply side, right? Bombay, Bangalore, Hyderabad, Delhi, Chennai. In the city centers, in the business districts, there isn't that much new supply coming. And as a result, profitability remains a bumper for hotels and hospitality plays focused on the central business districts of the big cities. I'm not so sure about the holiday hospitality piece. I think there the supply piece is picking up. So as I'm sure everybody watching knows, the Goa market, for example, the Goa market already has some degree of oversupply of hotels. Similarly, the Kerala market, the holiday market seems to be oversupplied, but the business hospitality piece seems to be a super place to be investing in at the moment. And thankfully, we made some successful investments there.
But Saurabh, I just wanted to touch on the financial sector as well, because yes, this GST reset that has been announced, but on the other hand, there were individual rate tax cuts that were announced earlier. Do you believe that this can give fillip to the credit growth cycle as well, which was anyway quite subdued of late? Do you believe there stands a chance?
So that's where, Srishti, I'm saying we are seeing distress picking up because of the job cuts. Right, so I think the IT companies are being diplomatic about it, and they're, I think, rightfully keeping their mouth shut about how many people they're letting go. But we are seeing a fairly savage job cutting cycle kicking in the IT services sector. And as I was saying, our channel check suggests that that's leading to distress, financial distress in the tech hubs such as Hyderabad and Bangalore. So I'm not in the tech hubs such as Hyderabad and Bangalore. So I'm not so sure we'll see a big pickup in personal credit growth. The main sector which had driven personal credit offtake post-COVID was personal loans, unsecured loans. The NPA development there has been pretty brutal over the last couple of years. Home loans credit quality was holding up. My sense is the first cracks in home loan credit quality are already showing. So I would be a little circumspect on getting too worked up about backing lenders and expecting a pickup in personal credit uptake. At best, what we can hope for is, courtesy the GST reforms, NPA development becomes a little bit more subdued. If the government is giving the Indian public 2 lakh crores more in their hands, hopefully that will give them some degree of financial relief for the next 6 to 12 months. But for personal credit or for retail credit to pick up, we need a jobs revival. The jobs revival isn't there at the moment.
Yeah, absolutely. And thank God Alcobev doesn't have any changes, right?
Yeah. I think the big positive is popcorn. How could we forget popcorn? We can now go to movies, have salty popcorn for 5% GST. I think that's such a big plus.
It is, isn't it? Movies are nothing without popcorn. But Saurabh, great to have you on the show as always. Thanks for your time.
Thank you.